Very good. We're starting here. Welcome, everybody. I'm Giuseppe Basile, also known as the FibStalker. Welcome to the FibStalker's FX Street Weekly Show. Today is November the 30th, 2016, and as you know, we have this webinar every week. I want to thank FX Street for setting this up, along with Mauricio and Desi. Thanks a lot, guys. You're always you're always very precious in setting all this up. So thanks a lot. Let me say good evening to all of you. Thanks for joining. And today I'm going to we're still live. Give me a yes if you're live. Sorry about that. I think my browser has. I see we are live, so very good. So thanks for joining today. We are going to, I'm going to talk about how we deal with price, and I'm going to share presentation here. In the educational section, I'm going to talk about how we deal with price differences, and particularly I will focus on two. One is the spread, different in price, but most importantly, I want to focus on some different differences in price that we notice, that I notice a lot with my students and my clients in the signal trading signal service. They have different brokers, use different brokers, and so they have different prices. I want to talk a little bit about that and one experiment I did recently to see how that can help you as well. After that, I'll review 5 markets: the euro dollar, the New Zealand dollar, US dollar, the New Zealand dollar, Singapore dollar, which is a little bit of an exotic forex, but very, very technical, and I love it. And we also have a long that is actually behaving very, very well. The dollar index and the US dollar Japanese yen. So let's start from the first educational section. That's me there. Risk is trader's job number 1. So if you watch this webinar, please stop it here and read the disclaimer. All the material I provide in these webinars is for your general information only. I won't talk about myself. You know, what is important is the kind of change I can do in the people who study with me. And I'm now doing the 5th FibStalker coaching program. Just started it. Very, very excited. And we're going to change more lives there. So these are my contacts. You want to get in contact with me, FibStalkerTrading.com, winningwithalgos.com. If you want to reach me, FibStalker@gmail.com. And if you have any questions in relation to what you hear here, please feel free to contact me. Welcome, Juana. A little bit of my research here and the organization I work with. So how do we deal with price differences? So this is the first section of this webinar, and is the educational section. If you like what you hear, you can always tweet it, and you can tweet something like this and add the link to the webinar here. All right, so before I get there, let me just remind you that I have a free course that you can download here. You can actually get access here, winningwithalgos.com/start. And I think I have it somewhere here. I want to show you how it looks like when you register. Actually, it looks something that looks like this, and it's in 10 8 lessons plus the introduction, and it's video based, video and charts. So if you're interested, just register, and for each section you have duration and the content of the session. So if you're interested, just feel free to winningwithalgos.com/start. It's free. All right, so let me do a little bit, some consideration on the spread here. What the spread is, I think all of you know. Generally, it's present in any financial instrument, and it's one of the costs of doing trading. Now, for some operators, this cost can be very, very small, or even at zero, for example, for some bank or large institutions, depending on the volume they trade. And the spread is also in a market like the Forex market, which is not a centralized, rather a decentralized market, where there are nine main banks, and then there are price aggregators, brokers, shops in the middle. Obviously, this spread accumulates, and each and every of these participants wants a portion of it. So spread is a cost of doing trading, and is the difference between bid and ask. It is smaller when the volume or activity are higher, and obviously it's larger when the activity is lower. So typically, for example, in some pairs, you will typically have higher spreads during the Asian session, because this session is known to be not for all pairs, but it's always going to be the one with a lower volume. This might well change in the future, but for now, Europe and US, they have the highest volume. Now, different instruments have also different spreads. For example, futures versus more exotic forex pair, like I know Euro Pound, versus stocks, and there are again different type of stocks, very high volume stocks, the SP 100 or Nasdaq 100, and then there are stocks which have a lower volume traded every day, down to the stock of the Russell 2000s, or even the pinky sheets, and so on. So what is the best time to enter a Forex trade? Typically when the market volume is higher, and we know that to be at the intersection of the US and the European session, and that happens in the morning, EST time 8 to 10, because the US market opens, the Euro market opens at 3 a.m., 3:30 a.m. EST, and we know that at 8, there are those 2 hours where we have the highest volume. So best practice to subtract for longs, or for shorts, the average spread of the instrument being traded to the stop price level. Why I do this frequently, and the lower the time frame you trade, the more important this is, because if it happens that price of lows and highs are revisited by a fraction of pips, you are not stopped out. Okay, and it's very, very important to do this. I just wanted to touch on the spread of Forex, and of course that applies to CFDs as well. But I wanted to really focus this educational section here on price differences that are shown by platform of different brokers. And as we know, different brokers and or trading services carry slightly different prices. This is generally not a problem for trading, as in normal conditions, what you have small differences between 1 and 4 pips, and particularly this difference is very small also when we work on a smaller time frame, where sometimes there might be issues. So when we work on the normal condition and the small time frame, these differences can be easily be absorbed in a trading plan, and I do this all the time in my FibStalker trading signal service. Now, what I found difference is that sometimes we identify areas on a weekly and a daily time frame as of participation from smart money, and I call smart money the some classes of algorithms which have a big impact on price, by using FibStalker in a certain way from highs to lows in on large time frames. And in these large time frames, occasionally there can be log tails that can appear or can be observed in extreme market moves and conditions. So when that happens, I want to know, and I am always going to compare that price to other services that I know have more reliable prices. Now, I will not mention the brokers here, which I don't find fair, but if you wanna, this is part of my research. If you wanna get information, just drop me an email. So what I notice is that, for instance, when we see them near reversal areas in large time frames, for example, daily and weekly, they can impact the way we look at the next area of participation from smart money, or the way we set targets as well. Because very often in counter-trend moves, the market will correct into areas where the next participation is coming. So on very, very large time frames, I'm interested in trading counter-trend trades as well. So let's suppose that we have a market that is doing this. All right, so it's a well behaved market, which is moving in extensions in traditional measured moves. Anyway, it's moving in measured moves, and this happens more often than not. In fact, later on, I will show you an example on one of the markets that I'm trading at the moment and I'm reviewing, which is the New Zealand dollar, Singapore dollar. So when a market, let's say that we know that there is an area of potential participation, when the market on the larger time frame retraces into that level, there is always on a smaller time frame, there is always another sequence, and that's the way high volume market works, believe it or not. And if you look at my work, and there is a lot of it in FX Street as well, you will see that happens very often. So obviously, if we have spikes here and here, the identification of this area of participation might be more complicated or more difficult. Simply we identify a level that simply do not work because of this problem. So to me, it's a very important problem that I solved with higher quality data, and again, and this kind of spikes can happen near reversal, and you will see them on the chart. I'm not going to elaborate on the reasons of those, but they happen, and we need to be aware of really what is the price we have to look at. What's the real price in a way, if such a thing exist in Forex. Now, price differences are more frequent in markets or instruments that are derived from others as well. And you will see that a lot of brokers carry for difference, for instance, which are created on an underlying market. For example, the equity index, the SP, the cash SP, the future SP are some examples. So prices of instruments can change. So there is an exception, which is probably represented by the futures market price, and the reason for that is probably related to the fact that they are highly regulated, they are centralized and largely automated. If you think about the CME Globex, for example, that gives you an idea. Now, on the other hand, the Forex is regulated but decentralized, and there are large banks, and then price aggregators, there are boutiques, there are brokers, brokerages, and so on. So it's really a network Forex market is really a network of agents. Other instruments like CFDs, as I mentioned, that are created or carried by brokerages can show difference in price compared to the underlying market, and that's understood. This difference can be especially important in a very large time frame as well. And I'm going to show you an example, but if you go back and compare your data with the data of other brokers, you will see that a lot. Now, sizable differences can also be observed in lower volume exotic, so to speak, Forex pairs, although not always. And it really depends on whether, which kind of volume also that pair gets in the session it belongs to. For example, if you have a Pacific play, like New Zealand dollar, Singapore dollar, it gets a pretty good volume during the Asian session. I found that some brokers carry price that is more reliable than others. Again, I won't name names. If you want to get information, you can always contact me, and I'm going to provide you some of the results that I actually found, and you can write me at FibStalker@gmail.com. And here there's also my contact information I gave you before. Particularly invite you to visit the winningwithalgos.com, and there you can find the signal service as well as the free course. All right, so what do we do with this information? Well, I made a recent experiment because I wanted to see really what was the impact of this. So we observed together with another students of mine, Tanks Mantelis, that we focused on different price, and we discovered that at the beginning of 2016, while all this did not impact at all my trading and the way I studied the SP 500, clearly other brokers had different prices, and when you have different prices, you cannot sometimes apply the same consideration I do on my charts, and this was puzzling some of the students. So I had to clarify this as well. Basically, you remember that at the beginning of 2016, we got the the SP 500 mini, and I'm going to show this here on the chart, and this is the weekly here, and what we noticed was that at the beginning of January we had this double bottom here. You can see it on the weekly time. I'm talking about this. I've been timing these areas for years now, and I have identified these areas or this area of participation from Algos before the fact. This one a few months before the market came into this area, but I want to focus on these two spike lower and the actual prices. Now, the prices were reported on the CME, and that's the first price here, is for the first low was 1,783, and the second low was 1,785. And on my platform, I had very small difference. Now, when it comes to future, we also have to understand that the prices might change in time due to the way the continuous contract is calculated as well. So when I made this check a couple of weeks ago, there was a price difference, as you can see, of 4.5 points, and that difference is even bigger in the second low here. However, when compared to other instruments, contract for difference carried by other brokers, we notice a huge difference here, as you can see, 181, and again, when a broker mentions that this data is derived from the future, then such a difference may seem very, very big. And in fact, you start thinking, is this related to the cash index maybe, or other markets? Now, clearly, these huge differences here prevent to study price if you use graphical techniques like Fibonacci. I use Fibonacci in a non-conventional way to frame price, not only to identify opportunities, but also to frame trends in price. And it works very, very well with high volume market. Now, so to me, this is a very important problem. There were some students who are a little bit puzzled, say, I mean, I cannot see the same levels that you have on my charts. Again, there are several differences for reason for these differences. For example, the way, again, continuous contracts are calculated, initial quality of price, whether there are spikes, major turning points, data processing, data pipelines, and so on, whether the data is cleaned, and so on. So there are really a lot of problems of why this happens. I just don't want to investigate the problem. I just want to be more practical here. And this is a chart of the SP 500, and which is the same chart basically that I'm showing here. And as you can see, when I did my analysis here, the market actually, the lows here respect the 61.8% level, and they give me the right perspective. Dump Money was also interested in selling this market initially and gave us the right perspective to get long this market. Now, when we look at other prices on provided by other broker, we can see that those same levels are not respected, and also previous levels here are not respected, and this might prevent someone from believing that this market is actually moving in a measured move and is actually moving higher. And in other cases, price differences price were completely different, and observe in this case, the lows in January actually come below the lows in that we had at the end of 2015. Well, September and October, so third and fourth quarter there. Third quarter, and they came more or less aligned with the lows that we had in October the year before. And when you look at the charts, clearly that's not the case, right? When you look at the actual price, clearly that's not the same, because this price were absolutely lower. And it's important that we're lower because, in fact, we were able to capture these lows as an extension higher here, and also as an area of potential participation from dump money long. So it is paramount that you consider these problems. That's the reason why I wanted to talk about it. So I trust my source, and I have a couple of sources that I really trust a lot in terms of quality of price, and they've served me very, very well during the years, and also when backtesting into the last 30 years of price data. So I will keep sticking with this data. And one thing you can do is certainly compare always the data you get with the other brokers. This is an important problem. Again, as I mentioned before, typically these price differences, especially in the smaller time frame, are not a problem because they are absorbed into the trading plans. So that's not a problem. But whenever you see differences between your charts and my charts, especially on larger time frame when the price reverses, and what we notice is that very often when the price reverses, you may have situation where maybe on one platform you see the market doing something like this, big tail, and then there is the reversal, and maybe on the other platform you are seeing something simply like this, and we saw that recently on a number of markets as well. So be careful if you use these levels for your traces. You have to be aware of that, and you can always ask me and I can give you the right levels to use. And this is something that I wanted to put out there because very few people talk about this. It's just something that we need to be aware of. It's not necessarily picking on brokers, because brokers can have weaknesses in certain areas and then have good strengths in other areas. And I always suggest you review the list of brokers on FX Rate as well. All right, and this concludes this first section. Where I wanted to talk about this problem that sometimes puzzles traders and students as well. Should I get more information on this, or get more information on the name of the brokers or the research I did? You can contact me at FibStalker@gmail.com. All right. And this concludes the first part, the educational section of today's webinar. Next, I will review the euro dollar. We'll review a number of markets here. If you like this review, you can always tweet, and you can use a text like this, and don't forget to include a link to the video. Now, so usually I do these sections by simply moving to my charting platform here and do the analysis, and that's what I'm going to do as well. Before I start that, I just want to remind you that we have a trade, of course, on the euro US dollar. We actually did this at the beginning, mid of November, and then again recently as part of the trading signal service. And if you want to get more information, come to winningwithalgos.com/signals. And so before I get to the review and see what's going to happen next, let me review with you the trade. And the trade is the one that you have here. We entered at lower prices. Our stop is 107.23, and the market has actually tested the 106.84 to the PP. Again, this was an higher level. We also entered the swing trade at a lower level, and that level was lows to lows, which traded to the first target last week. And you will remember that I mentioned that as well. So about these two trades, I've offered what I call risk-free trade. If you don't know the concept of risk-free trading, I suggest you review some of the webinars in the educational section on FX Rate that I offered in the last few weeks. And I also wanted to notice here that the move into the resistance level, start of resistance area that is around here, actually was timed as well, and again offered a risk-free trade. We saw a sequence higher, so algos on the smaller time frame picking price in this area and pushing this price into first and second target. And you should not be surprised that right at that second target, where there was also the start of resistance, algos from the larger time frame came in, and at the same time the smaller time frame took profits as well. And we had a confirmation level that I actually provided before the fact in the room as well, in the trading room. and we have people entering at 106.47, which actually broke price, which actually offered a risk-free trade very, very quickly. So this is a trade where we are risk-free, and there's a larger trade where we are risk-free as well. So we're not carrying any risk on the euro-dollar at the moment with these two trades, and there is the potential for this price to move into 104. Now, there is very little we can actually do at the moment in the euro. These were the two areas that you wanted to trade, and I thought it was important anyway to review this matter. And you can see here, the participation of both the smart money as well as the dump money here, pushing this price lower. So the first target is going to be below. We have also a target from the larger time frame, as you know, and that's below 104. So if this market continues moving lower, you're going to remove this position when the market gets into 104. Now, remember that this Sunday there'll be also the vote in Italy for the yes or no for the changes in the constitutions, and I think that this can actually, if the no wins, this could actually accelerate to move the euro. What I think is not really important, because the market does not give a dime of what I think. But what I know is that every time algos take positions in this market, news trying to complete the target. So that's what I know and what I'm looking at for a continuation lower, especially if the no wins. Now, this concludes the review of the euro short trade, which is something that we've been trading in the FibStalker trading signal service as well. Okay, next I'm going to review the New Zealand dollar US dollar, and this trade was also a short. I don't want to represent that I am always successful in my picks and in my trade. In fact, this was we traded this market at lower prices. We traded this market at when we had the first reaction here from lows to lows. Now, this market, I also gave for this market confirmation level. So the trade that we took at 80.80 was anyway a risk-free trade. So as the market went above the highs here, those who took the risk-free trade actually did exit this trade at break-even plus cost of trading. And this market went to trade all the way into the notable extension here. And as you can see, we are seeing participation in this market. So this market is actually, I will actually remove the previous trace there. And we know that this market, we know very well that this market now has two targets. The first target is 68.80 here, 68.90, and the second target is the target that we have since the very beginning, the 68.50 level. So as the dollar index continues higher, we should see this market correcting into 68.50. So if you're short this market, there's no reason why you should actually consider longs at this stage. This market had a big move higher, and it could actually find some resistance as it keeps moving lower, but eventually I believe is going to hit this level. So 68.90 and 68.60s are the two numbers that you want to see. Although I'm not going to review Australian dollar, US dollar here, just want to mention the fact that basically the same trade is actually pushing and will keep pushing the Australian dollar Japanese yen down. I gave these two additional new trades as trading ideas in the trading signal as well. Okay, and this concludes the review of the New Zealand dollar US dollar. Thanks for watching. Next, I want to review the New Zealand dollar Singapore dollar here. And again, as I mentioned before, this is kind of an exotic pair and does not get the same volume, although Pacific play a very good volume. If you like this review, you can always tweet it on your Twitter account. So let's get into this. I love this market. I don't have a lot of price data for this market, but I really love it because it's very, very technical. That's what I get. That's what I have for this market. But this market has been extremely and beautifully technical here, trading a first 50%. And the reason why I'm mentioning it is also because we have traded it, as I'm going to show you in a moment. And support from smart money and dump money, first target, profit taking, right at that first target. Very, very technical market, and moving lower into an area of participation of dump money and smart money again. As we see here, this market is very easily framed using some of my models. So again, we have participation at 0.97, sorry, 97.50 here, and then price got into 102.20, and again we saw, and we traded this week, we traded the participation here, and I believe that this now is going to move into 105, where we have the first target. So far, so good. Risk-free trade for us in the trading signal, FibStalker trading signal room. And if you want to get this kind of opportunities, just drop me an email or go to winningwithout.com/signals and let me know what you think about that. And this concludes the review for the New Zealand dollar, Singapore dollar here. Thanks for watching. Next, I thought I would review the dollar index for you, and the reason why I want to do that is because obviously the dollar index has been on the in a lot of has been in center stage and center this week. Everybody's speaking about it. Everybody's speaking about how and why the dollar index should correct. When a lot of people talk about something, and there are also a lot of people who are wrong about something, so you have to always to keep that in mind. I have not expressed my opinion. I only know that before a train like this stops, there's a lot that needs to happen here. And this market has tested previous highs, went a little bit higher, and then it came back, and clearly this market did not test a level that I was looking for. Came close to it, but did not test it, while dump money decided that this was a buy anyway. So I always like to see smart money participating as well, and I don't exclude that eventually, if we don't see higher highs here, this market is going to test that 160. However, that didn't happen yet, and also we saw the US dollar Japanese yen continuing higher, which is the next market I'm going to review. So dump money still believes this market is going to continue higher, and there's no reason to believe that, as I mentioned also in the past weeks, that this market cannot get into 106.39. In fact, I believe that's the next stop for this market. Maybe before it gets there, we're going to get some sort of reaction, and I'm going to frame this price by actually using this level that I'm giving you here, 99.09. That's the level that algorithms are going to use in order to model this market moving higher. All right, and this concludes the review for the dollar index. If you like it, you can trade it. The next market is going to be the review of US dollar Japanese yen, and again, if you like this, you can feel free to tweet it. And I want to actually just notice here that this market during the week started a correction. Everybody was talking about lower price, but if you remember last week, and I find the FS Street section as well. First of all, we know in this market that that actually the 170 was an area of participation from Algos, and the what we saw smart money coming in, dump money, selling that market, then smart money coming in again, dump money again, selling the market, and we know very well that eventually we know very well who's going to win eventually, right? And in fact, eventually, as you can see here, smart money once, twice, three times, four times, and then finally the dump money had to give way, and that's exactly what happened here. Dump money participated around levels here. And I'm just trying to find the US dollar Japanese yen review of last week, and as I mentioned on FS Street 1 week ago, the US dollar Japanese yen to blast through 115.52, and I can always be wrong, of course, and it's not that I have the ball here, but the point here is that there is a participation from this market, a market very, very extended, has not retraced, and most importantly, when the market started testing this 122.46, we saw no participation whatsoever, at least not at that 112.38. Yes, we saw the market selling a little bit here, but the next day blasted higher. So that gave me the indication or an idea that there was no one here. There was really no one here trying to stop this market. And would you step in front of a train like this? Now, so the suggestion I have is that this market, which will eventually correct like every market, although this market has good reputation of going higher for months, not weeks, months, but eventually this market is going to retrace, and that retrace will look like the start of a move lower, or will just be a retrace. Okay, so I'm telling these things to you before. Look at how steep these retraces can be as well. And make no mistake, this market will eventually retrace, and I believe that algos are going to look at and use this level here. So the point is that that retrace will not come not before we blast, as I mentioned last week here in the video, in the review here, before we blast through 115.52. Why? Because there was no algos and smart money trying to stop this market at a level where they should have or could have stepped in, and they didn't do it. So make no mistake, you're going to see higher prices here in the US dollar Japanese yen. Now, above 115.52, we might get a retrace, and then that could be a very, very dramatic event. So I'm telling you now not to get scared about it. You know, this could be something that brings price lower here a lot, and I'm going to use in my trading room, I'm going to use other levels as well. And if you join us, I mean, we're going to capture the next correction as well as the next move higher in this market, right? So if these moves come from 110.86, look at the potential this market has. I mean, you know, going higher and retraces in this level and then going from 110.86 to 122. This is the kind of moves we want to capture, and these are not different from the moves that we captured on the way down when, if you remember very well, in February last year, when we had the daily Tokyo trading room, we were trading this market short when everybody was saying that the US dollar would go to 131. So remember this and make sure you're always aligned with smart money. In fact, as you know, I believe that smart money leads and initiates and leads, moves higher, while dump money follows. And I think we saw a lot of dump money at the beginning of the week when, you know, we saw a continuation of the move lower here, and everybody was calling for the start of a correction of the dollar. There are still a lot of bears in this market, and I love it because, and that applies to the SP 500 as well. A lot of people scared and looking for you know, a crash here. I heard one of the commentators saying that this market is going to go lower. Yes, of course it can, but it's not the start of a bear market. This market is all but in a bear, and in fact, as you can see here, it reached the target of a setup that we had basically back at the beginning of the year. We actually reached the first target last week of this measure move that we spoke before in relation to the price differences. So congrats and onwards. Stay stay on the path, and if you are interested, join us in our community and join the trading signal service here. We have the review video analysis for every month. I think this month is pretty busy here. Actually, I review the market twice a week in the weekend, and also on Wednesdays I produce a video. In fact, I'm going to produce a video after this video here, and then of course there are the signals that there are two types of signals. There are the trading signals and the trading ideas. The trading signals are tracked for performance. We had October, we had 17 more than 17 unit of risk in gains, and as you can see here. And November was a little bit was lower, but we still have open trades, 3 open trades, which are going to go to targets in December, very likely. So we had that 3.61, which is a good result anyway. All right, so thanks a lot for watching. If you want to reach me, you can always do it at FibStalkerTrading.com. Last week I started a coaching program, the 5th session. Very excited about it. If you want to join, let me know. And these are my contact information, FibStalkerTrading.com and winningwithalgos.com, and you can always reach me at FibStalker@gmail.com. I answer your emails personally. All right, so thank you very much for joining. Have a great evening, and I'm going to see you next Wednesday at 7 p.m. EST as usual, and going to get more information about myself and what I do. You can visit again FibStalkerTrading.com and winningwithalgos.com. You have a great evening, and you have I'll see you next week. Bye bye now, and see you soon.